What is going on, everyone? It's your boy Tony at the weekly close, here to report on the art of the chart and share the latest trends, thoughts and analysis from different minds all in one place. So this week we're kicking off a little bit more about the S&P breakout, what smart money is doing on the sidelines, and what does it mean for BTC. So we're going to kick off a bit of a summary and a recap on what Game of Trades shared earlier in the week with the title "Smart Money is doing the exact same thing they did in 2007." And what this was a really interesting kind of summary and kind of comparison about leveraged positions with hedge positions in the S&P 500. You know, this extended activity. Preempting kind of runs, or smart money over engaging in the market in anticipation of positive economic growth. But the only exception to this, we can see this is happening in 2016, 19, 21, all this overextended engagement. If that's zero, all this kind of like positive going long and engaging in the markets. The only time that went horribly wrong was in 2008. But what's interesting is when you kind of offset this against the open interest. So this is, kind of like the level of, the extent of how many kind of like contracts, the engaged kind of futures contracts and everything that smart money is in over engaging in for timed reversals in markets. It's interesting to see how over engaged they are at certain times and how kind of pivotal these are for timely reversals. So in this example here, where we kind of have almost this like a head and shoulders, this kind of like overextended engagement, just before kind of this pullback in 2015. This is an interesting stretch here, and then this kind of super over engaged engagement, from in the open interest prior to this second low, and then this one more anticipation before this kind of pullback. But what's interesting when we take this to kind of the most recent activity leading up to January 2023, we kind of see how open interest, i.e. like smart money over engaging in all of these contracts, really went to lengths to engage in that activity prior to that dip, so timing those reversals. How the same thing happened to a much higher extent before we kind of really pulled back in just before January 2022. And how, where maybe others thought we were out of the woods and maybe thinking that maybe this price of the S&P up above us was a low. But actually, again, smart money engaging in those with that spike in open interest, suggesting that reversal and that second low. But what's interesting here is we haven't got this over engagement of these open interest contracts, i.e. this smart money kind of suggesting that there's a reversal or a further kind of spike down. Actually, it's the opposite. It's a lot of money sitting on the sidelines. It's a lack of engagement. So in light of all of the kind of the recent news that we received last week, the Fed announcing a 25 percentage point hike, which everyone was expecting, but incredibly positive jobs report on employment. Well, it's interesting to think, this money is, this is all taking place before even the engagement of smart money. And how long can that sit on the sidelines before they miss out too much? So let's follow this up with some simple technical analysis from FX Empire. This is again just on the S&P 500, and there's going to be a lot of focus on the S&P this week, just for the simple kind of really the news that's come out, but essentially the breaking out of this channel, which is really so important. So we have this is the crossing of the 200-day moving average and the 50-day moving average, which obviously when there's a crossing of one over the other, that either signals something really bearish, say in this instance, which kind of preempted all this. But it will be interesting to see, obviously, if we're going to get the opposite, i.e. the golden cross, the 50 crossing the 200-day to go onto the positive. But in the other sense, in terms of any forthcoming resistance, in the meantime, as we kind of said previously, it's just this approximate 4,300 region which we can anticipate being tested, and we'll go into like closer timeframes about why this has actually been so well supported and back tested going forward. Earlier in the week, Marzel had shared a really good video about the must-watch today of the Ethereum price, showing kind of bullish early signs. But the kind of few slides that I've pulled out. I think are just kind of interesting reminders with regards to kind of Bitcoin on a kind of macro time frame, and this is just one of them for anyone who's not seen kind of the monthly chart. This going back all the way to 2013, this kind of logarithmic chart, which is kind of shown and maps almost perfectly these highs and lows, which, for anyone who's not familiar with logarithmic charts, this isn't going in typical increments of equal value. This is an exponential axis. We've got down here $57 for maybe all the times back in 2013, but going up to $800,000. So here we are at the 22,769, kissing that bottom edge. We've bounced up and above. And the question that everyone keeps preempting in the next bull run is, will we be testing this upper band kind of going forward? But some of the things that were kind of looking at a much smaller time frame on the 4-hour chart, was kind of all of this movement in within this kind of upper wedge. We've tested it both on the highs and the lows, which generally is actually quite bearish as an overall pattern. So expecting a breakout to the downside, and considering the run we've had, that wouldn't be unexpected. But this kind of last leg has just been moving sideways, which zooms into this at the moment. And while this kind of video was published earlier in the week, it kind of with this doubling up of the parallel channel and this kind of upward support, it kind of preempted further playing out within this horizontal channel. But what we've seen since this has actually been a bit of a grab above the channel, and actually now a bit of a run to go underneath it. So an interesting question of a liquidity grab, faking people out, thinking that it's a breakout to the upside, and now it's going for an shooting all the way down. But it'll be interesting how we're going to kind of compare this with some of the things that Tino at Traders Reality has been pointing out with the high block capital. And I think just as a general reminder, but we're going to compare this shortly with Green Star Trading and their Elliott Wave analysis, and the kind of, if you believe and subscribe to Elliott Wave, is this kind of for us to be kind of mindful of, is this potential M pattern playing out? So we wanted to be seeing some clearance over whatever the kind of 4150 price mark on the S&P, because at the end of the day, the reason we look so closely at the S&P, there is no bull market in crypto if you're into that, or Bitcoin, without there being generally kind of a strength in the S&P and the markets at large. So following on from that, from Tino, we had this video, beware, you have until tomorrow. So this was just before the FOMC meeting, where generally, essentially, a lot of the news of the 25 percentage point move up was essentially priced in, and then we've only seen a negative kind of pullback off of the earnings reports from Apple and Google, who kind of missed massively, as well as Amazon, I believe. But the first, what I thought was one of an interesting calls that was made by Tino on this, so on the Dixie chart, dollar dominance, was the core of the potential for reclaiming this kind of this vector candle, so a shoot up and off these lows, and the kind of anticipation, if the Dixie does run back up, Bitcoin to nosedive, which kind of at present has actually done that, which is actually kind of playing out as we speak at the moment, at that kind of price, at the 20, I think testing the 23k and below at the moment. But I thought what was even more interesting was this anticipation of kind of the Dixie moving up, and then essentially the USD, this is the Canadian dollar here, the inverse relationship, just thinking about other trades to be playing obviously in tandem, dollar dominance moving up, USD CAD moving down as a result, and the opportunity with kind of the intrinsic relationship between oil and the USD CAD on these charts, just with the simple fact that Canada supplies 62% of crude oil imports, at least in 2021, were all from Canada. So if it's going to get that inverse relationship between one and another has since played out since Thursday, with the USD CAD going down and oil going up as a result of dollar dominance and the strength of the Dixie. And this is what I was just just jumping back for a split second, looking at the kind of liquidation levels on this heat map that Tino loves to show on the high block capital. This was earlier in the week, kind of showing where all in these intense areas in yellow, where there's all this liquidity, all of this potential long shorts pent up in these regions. If we think about the chart we just had earlier with Marzel showing that parallel channel on the 4-hour chart, it saw a breakout to the upside, so towards the 24k. This is what I mean about a liquidity grab up here in this region, and now it's just plummeted down, and we've seen it claim these three regions where there's been all this liquidity building up, all this money sitting there. So it's really interesting, and as we can see in previous times how it does that, it moves like Pac-Man. It'll be interesting to see where it moves next. There's question mark down here. Are we going to be testing? That's 21,000. And I know that obviously looking on a larger time frame with this, obviously there's naturally always going to be lots of people putting in several contracts, down at much lower levels, i.e. the calls for 15,000 and 12 and 13. But it'll be interesting to see is like can price move in that direction in a sustainable manner. It'll be interesting to see. So that's one to watch. Moving on to kind of Green Star Trading, that who missed a week last week, but we've got an analysis, an Elliott Wave analysis for, no surprise, the SPY at the moment, and it's interesting for so many reasons. I think I stated last week how some of the bearish cases came off the table because it hit in certain invalidation points. So it's interesting to see what kind of Tom's analysis at the moment still has in store for us. So this is the natural resistance, but it was the incredible kind of knockbacks from these heads, and then maybe an ever so slight fake out, and then simply too easy a reading and too easy a trade. So it's interesting that it's got something to change or something to be a bit more difficult moving forward. But what's interesting and what's maybe some more positive about this is at least on Tom's charts, he has the 250 EMA. We've got I think this was on the daily, and essentially look at the the several times that this has been back tested. The 200-day EMA, as at least on those 3 of the last 4 candles, has really been back tested, and then we've got the moving averages coming up to support. So it suggests positivity, and again a bit of a potential clear runway from a linear technical standpoint up to that 4,300. But it's interesting to think about maybe some of the other things that are going to be in store, at least from an Elliott Wave perspective. And the only reason I've kind of just shown this was just I think it was fair enough to just show the most slight divergences on the RSI, just suggesting there's actually just more strength taking place behind the actual price action at the moment, suggesting that there could be at least on the short term for a little bit more upside to come. But I guess trying to be unbiased in this at the same time, I thought it was interesting just kind of pointing out one of the things being discussed. What is taking place right here, right now? Is this a corrective pattern? Is it impulsive? I think the interesting thing and a good reminder for anyone who likes to rely on Elliott Wave, again, if you know the simple premise of 5 impulsive moves versus up against 3 corrective moves, depending on the direction of the market, and those work in fractals. So within the 5 ways, there's 5 ways, there's 5 ways, and the same with the corrective patterns as well. But what's most difficult is trying to discover early, is an early pattern, is it a B wave or is it a 1 to a 2? But essentially this kind of depth of this retrace really were taking off the cards of it being an A, B, C, just because that was going into the 80-90% retrace of this move, which normally doesn't happen for an for what could have been an ABC, and which is why what's being kind of more considered at the moment, and not just a preference from a bullish standpoint, but the kind of cleanest read really is this. If this is 2, this is the beginning of a wave 3, because we have a 1, 2, 3, 4, 5 traditional impulse, 1, 2, 3 or ABC for the correction, and then what I always call just kind of like the 1-2 punch, because we've got the beginning of the wave 3. Hopefully, we're going to see how this plays out. A 1, 2, and these are the beginning waves at a smaller level. 1, 2, that could be kind of continuing further. So an interesting analysis. And I guess one alternative which I thought was interesting on that count was whether this was kind of going into a leading diagonal, which in itself kind of still supports a bullish momentum. So it'll be interesting to see how this plays out in the coming days. Just to kind of conclude with a little bit of on-chain analysis from Glassnode, they had a really good video called "Short Squeeze Off Spot Demand." I think it's interesting to highlight the importance of the spot market trading versus the futures contracts at the moment, but also some of their kind of some of these dashboards at the moment, giving some background clarity to how we've got to where we've got at the moment. So with this first one, with the Bitcoin total futures liquidations, I mean, just look at the how all of these short liquidations that have taken place just this year alone, I mean, compare that to, never mind, we know we've had a quiet period since November, but I mean, I think I've got the figures here: $165 million, $100 million, and $65 million in short liquidations, which has obviously just been spike. You can see there the price in the black in the background, but spike, and maybe just sustaining price at these levels at the moment. So with all of these kind of shorts kind of dropping out, it's no surprise that we're going to get a little bit of break from all of this liquidity leaving the market, and as we're seeing at the moment, a little bit of pullback kind of taking place. But looking at the kind of the future long liquidations, I mean, it's just kind of interesting to see the unprecedented levels. I mean, this goes back always to March 2021 of kind of just what took place on January the 14th. I mean, there's unprecedented levels in recent times of all of these short liquidations. So, everybody being anticipating lower prices and just being kind of like capped off, and that shooting up to the upside. So it's interesting to see how from such a quiet November and December, we spoke earlier, at least on week one, of how that volatility and with volatility, price action and movement, that's all kind of coming back onto the scene at the moment. And I guess what's interesting is just kind of looking at this is, well, if in orange is the futures estimated leverage ratio, so i.e., people trading futures contracts on high leverage, people who are, whether it's just even your simple 2x's, but your 10x's and your 100x's, and those trading and really overextending versus the Bitcoin price. But we've seen people really cool off in the trading in the trading region, and price starting to sustain itself, which suggests it's not futures that are supporting the growth at the moment anyway, but spot prices, people trading on spot instead at the moment. And I guess the interesting thing, talking about, looking at this dashboard for the Bitcoin exchange, the deposit and withdrawal volume, is not so much, it's just going into January of just absolute kind of flatline activity. So this kind of net aggregation of inflows and outflows on all exchanges. It's essentially, if that being FTX collapse, but basically a lot of people taking and that being representing something of a historical point of outflows on exchanges, that being November, roughly the time of the FTX collapse. But it's been absolutely kind of flatlined activity as of late. And I guess combining this with the thought of the Bitcoin exchange net position change, this is just showing like the kind of historical level, zooming in at that level of the net position on exchanges. Since 2012, we've never seen such a drastic outflow of what since the FTX collapse has caused, and people taking the Celsius and all others being kind of linked to this, but unprecedented levels of outflows off exchanges at the moment, which is obviously incredibly interesting. It'll be interesting to see how that impacts price. I guess less risk signals for long-term hodlers. It'll be interesting to see how that plays out. And And then finally, I thought what was kind of interesting was, thinking about the importance. Obviously, whales have in this whales. Those representing really kind of large holders of large enough bit of volumes of Bitcoin to have impacts in the market, but take into consideration at different time points, i.e. 2017, 18, 19, 20 and onwards, the realized price of Bitcoin whales, the realized price being the combination of all of the kind of Bitcoin at the prices that they were acquired at that time, and the amount in circulation at that time. So as you can see from never mind the bottom one, but from the light blue 20, so all the 2017 whales have they're in the green. Obviously, the entire time they haven't been threatened, but they've come down to like almost break even at points. But what's interesting, there were points where those largely accumulating Bitcoin in 2018 and 2019 were at least 2018 was for a short period in the red. And 2019 now only just kind of seeing some sort of positivity. So it's interesting to think and see how with whales having such a positive influence, and obviously acquiring so many Bitcoin at lower levels and then selling off at higher levels, obviously a sign of strength of getting this amount of circulation behind price, which obviously they're the combined incentive obviously wanted to sell at much higher prices. So good signs of support right behind them. I hope obviously you guys have enjoyed the combination of different views this week. Please remember to like, comment and subscribe, and I look forward to giving another report next week.